Good evening. I don't look at candlestick just by the name of the pattern. I am much more interested in the emotions behind this pattern formation or a candlestick formation because we are emotional beings and we also know that emotions play a very important role in the trading. If you read this candlestick pattern by the emotions behind this pattern, you understand this market little more differently than by just mugging up bullish engulfing, bearish engulfing, hammer, shooting stars, and other patterns that we actually see in the markets. Let's look at how to interpret these candlestick patterns emotionally and make sense out of these emotions behind the candles. Take a look at Bank Nifty today. If you see this Bank Nifty opening, I'm trying to gonna explain the complete setup, what happened last couple of days. If you see this green candle opening at the low, closing at the high, bulls had a complete control. They could close at the high. Next day, gap up opening and market closed, though looks red candle, but previous day closing to this day closing is still up. We closed up and we closed almost towards the high of the day. Next day, market gap up, tried to come down but rallied up and closed almost at the high of the day. Yesterday also, market gap up, closed almost at the mid of the day. That means from the high there was some kind of a sell-off. That means in the last 3 4 days, more or less, it was the dominance by the bullish bulls, rather I could say. Now look at this one, this pattern that is formed today on Bank Nifty. What happened today? Market opened slightly gap up. Bulls try to take the control, push the market higher. Unable to sustain the high, they gave up. Bears try to take the control, push the market down. They are still not able to keep the market at the lows. Bulls came back, snatched it from the bears, and almost closed at the middle. That means bulls try to take the market up, did not succeed, did not close at the high. Bears tried to take the market down, did not succeed. Why I'm saying they did not succeed? Because if the bulls success meaning, for me, according to me, success of the bulls meaning price closing should be almost at the high of the day, almost, more or less, maybe not much of a seller from the highs. Success for the bears meaning the price comes down, but the closing should be towards the low of the day, right? If the bears cannot close the cannot maintain the price at the low of the day by the closing time, that means it is not a success of the bears. So what is this candle pattern? Neither bulls were in control nor bears were in control on this day. That means both played zigzag. This is the first time after last 4 or 5 days where we saw a neutral pattern. Neither the closing in favor of buyers nor the closing in favor of sellers. That means the buyers are not available today. I mean that to the closing, bulls were not dominant. There is no dominance. Dominance was there from the bulls in the last 3 4 days, but today the dominance is not there. To add to this non-dominance of the bulls or the buyers, if I drop down to an hourly chart in the in the Bank Nifty, what I see is I have been worried about this RSI above 70 to 80 levels. Finally, if you compare this high and this high, we see a higher high in price but a lower high in RSI. This is confirming a divergence. And this candle is very significant because we tried to almost hit the high but could not sustain. Now, how do I trade this? Bharat, this given this, how do I take a view given the neutral pattern? This is what I would do. Today low was at 45,000. Today high was at 45,600 something. Let's say 45,700. So now what would can we expect is basically this market going to settle within this range 45,000 to 45,700. 45,000 becomes a very strong support. 45,000 to 44,800. Why 44,800? Because the gap is also here. So gap and then 45,000 becomes a very strong support for the market. High on the upside 45,007 becomes a resistance for the market. So as long as the market sustains within this range, we'll have to play slightly bullish, not very aggressively. We will play slightly bullish. 45,000 very close to support where the risk reward is very very good. So 45,000 is a low risk uh, a buy trade can happen around 45,000, right? 45,600 700 becomes a resistance area. So looking at this neutral pattern will lose its significance if the price starts going above 45,700. If 45,700 breaks, which is today's high, this neutral pattern that we are discussing will be nullified. So as long as the 45,700 is not broken, we'll have to play slightly bullish, not very aggressively. 45,000 to 44,800 is a very good area to consider any low risk buying propositions in Bank Nifty. Having said this, if I look at options data, it was more or less this is the first day where we saw bulls not aggressively building the position in Bank Nifty. If I see the rating side, the significant rating has happened at 45,300, so that should be a significant strike to watch tomorrow morning or for the entire day. A significant rating on the call side is happening around 45,700. So data wise also that becomes a resistance area. So 46,000 to there's a shift to 46,500, but I don't think this is the right shift. 43,000 to 40,000. I think the option data. I think a lot of people are little worried about the very strong moves up and down. So the data is not very correct. This is the too wide a range to consider. So I think 45,000 to 46,000 should be a better range to pay attention. Right. Having said this, so bullishness intact. Uh, but within 45,700 to 45,000, we will have to be slightly mellowed down. Any buying should be at a low risk reward, which is at support area. Having said this, on Nifty also more or less we had the same setup, but Nifty looks little more comfortable than Bank Nifty. If you see the same candlestick pattern, gap up, close at the high, gap up, close at the high, gap up, close at the high. Today, at least for a day, this is actually, if you say by candlestick, this becomes a hanging man. Hanging man meaning bears tried to push the market down, unable to sustain the low, push the market high, and we create a head and a hanging body here. So it becomes a hanging man. Why it is significant is it is not a very strong bearish pattern because though bears try to take control, they took control during the day, but they could not keep the control to the closing of the day. The closing is still almost at the high of the day. So this is not a very strong bearish pattern. Only concern is RSI at 74.75 on daily. On hourly chart we have some kind of a divergence, but as long as the price sustains above the short term moving average, we'll have to though there is a divergence in RSI, we'll have to continue to have a bullish stand in the market as long as the price stays above the short term moving average. Short term moving average support is around 19,350. Yesterday we were discussing about 19,300 where extraordinary open interest built up on the put side 19,300, which becomes intraday support is what I told yesterday. So that intraday support is still at 19,300. Resistance is at 19,500. So looks like the range for Nifty next for tomorrow looks like it is going to be 19,300 on the downside and 19,500 on the upside. So we'll play with slightly bullish view, we will play with a range of 19,300 to 19,500. Right? Option data, it's not a very strong bearish candlestick pattern on Nifty, so nothing to worry. Bank Nifty, neutral pattern, no bearishness. So bearishness is not seen anywhere, but arrival of bears is definitely seen in both Bank Nifty and Nifty. It's not bears basically; it's basically profit booking after a fantastic move, but nothing significant fall is suggested also in the pattern. So it is still a buy on dips. Nothing, no shorting. Never short this market. Only thing is tighten your stop loss, book some profits, move your stop loss higher, and if there is a dip to support areas, that is the place where low risk entry will also be triggered. In terms of Nifty options data is concerned, we saw some significant writing at 19,400 both on the call and the put side. So there has been a straddle being written, unwinding seen at 19,300. So 19,300 becomes a support area. So we have seen unwinding at 54 lakhs, unwinding at 19,300 call. So technically 300 is not resistance anymore. So that becomes a support area. Some significant trading is happening at 19,400 both on call and put. So this is a straddle being written at 19,400. So they are collecting a premium of almost 100 rupees. So 100 rupees is nothing for the markets given. So this is not a right range So if I go by straddle value, 66 plus 51, so almost 120 rupees is 110 rupees. So basically, the straddle is giving me a range of 19,310, sorry, 290 to 19,510. So basically, the same 300 to 500 range is suggested by the straddle that has been written today. Some significant trading happened at 19,550 call. So basically, 500 to 550 we see where some writing is happening. So that becomes a resistance area as far options data is concerned. 300 becomes an immediate support. Ultimate support is definitely 19,200 because there is a gap there. So this gap here will still definitely act as a support area. So no shorting this market. If at all there is some dips, that should be a very good opportunity to again pick up long positions. Support area is 19,200 is a support area. So as long as 200 is held, we will continue to have bullish view. 45,000 to 44,800 becomes a support. That is where a low risk entry will be happening on Bank Nifty. So we will have to play bullish in both the aspects. 300 to 500 is what immediate range for tomorrow in Nifty. Bank Nifty has a wide range of 45,000 to 45,500. Right? Let's play bullish, but don't be very aggressive. Let's mellow down a bit. Right? Thank you so much. And if you want to keep getting these updates, do follow us on all the social media, Telegram, Twitter, Insta, so that you don't miss any of these updates. And thank you so much. Bye bye.